to $25,000 hard on day one. I said, well, what do you want to do? You want to take a risk? He goes, yeah, let's do it. So he took $25,000 down. He said, for some, I don't know how he figured it out, but he said, that check cleared 6 hours later. That guy took that $25,000 and ran right down to the bank and cashed that check. But he bought the property, and now he owns it. Now watch how Jake is going to make almost 1.6, 1.8, I can't remember, $1 million, and then by the time he's done. Watch this. He sends me this text. So, I know that Dan put on that thing like how I'm going to teach you how to make $100, how to turn $100 into $30,000. I took that off the slide so I could put these on because this is real life. This is really cool. Watch this. So he sends me this text message. He shows me pictures of the property. Beautiful. Absolutely gorgeous. Before and after. First one is done. 98 more to go. Tenant moved in today with a $100 rent increase. He said 8 other approved applications walked the renovated unit and requested the upgraded unit. $100. Yeah, look at it. Yeah. Hey, bravo, bravo. Because watch this, guys. You know the formula. Watch how the formula works. 100 units. $100, 99 units over the next 12 months. It's a 6.5 cap property. This is it. $1.8 million.
What did you pay for it?
He paid 2.4. 2.4. Yeah. Yeah. So 2.4. He put $400,000 down. That's more than double. Quadrupled his money. More than quadruple his money. This, the Subway franchise guy can't beat this. This is how millionaires get made in multifamily. Single family fix and flip. You don't see this. Okay? Is this hitting you? Yeah, I see you shaking your head like, oh, yeah. How do I do that? Okay, so in other words, by asking your tenants to pay $100 more per month, your children's net worth skyrockets. That's how I think about things. Because I really like all 4 of my kids. Okay? Now, let me show you something. This is how you get screwed when you're starting out in the multifamily business. The absolute unbridled power of the cap rate in real life. Meet Daddy Warbucks. Nice guy, huh? Look at him. Everybody knows Daddy Warbucks. Everybody has a Daddy Warbucks. Everybody knows who these guys are. He's a successful business owner, has been for the last 35 years. About 30 years ago, he came to one of my seminars. I'm 72. I mean, I was a young man. 20 years ago, he purchased a 40-unit property. He's debt-free now. He's had 20-year AM, paid off. He owns that thing free and clear, and now he's ready to cash out. Now, here's one of the downfalls, one of the negatives to owning multifamily, is you only get one chance to sell a property. See, if you own Apple stock, you can kind of, time the market. I'll sell a little bit now, I'll wait and see. When you sell a multifamily property, you got one chance. So you got to maximize that sale. Watch how Daddy Warbucks maximizes the sale. He wants to leave little Johnny $1 million. That's his plan. I want to give my grandson $1 million. So he meets with Mr. Joe Broker to get the value of his property. What's the one question that the broker has to ask him? Because he knows the cap rate. Remember the formula? Daddy Warbucks wants to solve for the price. The broker knows the cap rate because he knows the market. What's the NOI? That's the only question he asked Daddy Warbucks. And he can tell right away, I can sell this property for this price. So, the NOI is $100,000. The cap rate's 10%. What's the asking price? $1 million, right? $1 million. Everybody figure out how we do that? So simple. Little Johnny's going to get his money, right? Wrong. Here's why. They don't call him Daddy Warbucks for nothing. He wants more. Because after he pays off the broker and a couple other bills, little Johnny doesn't end up with $1 million. So he wants to maximize his investment that one last time. So what is the one thing that he can control? What's the one variable that he can control? The NOI. He can drive that NOI. But can he really? Watch what Daddy Warbucks does. Because remember, the banks will lend you money. Banks are great. The banks are your investment partner, but the banks are out for the banks. And they will approve a loan at a particular price, at a particular NOI, if they see 3 months history. So if Daddy Warbucks can just show an increase in the NOI for the next 3 months, you can take that information to the bank and you can get a loan. So he has to increase his income by 10% in the next 3 months. How does he do it? No, income. We're just talking income. Raise rents. He can't raise rents because everybody's on a lease. But here's something else. He's been very lazy. He's only got 80% occupancy. So he's got 20% vacant. So, but he fills those units. In 3 months, he's going to fill 20%. How's he going to do that? To all his friends? Marketing? No, I don't care about expenses. We're just talking income. Discount the rents. He can cut them down, but then I'm going to look and see. Wait a minute, these rents are below what you're currently. I'm not buying this property. He keeps the rents the same. How can he fill up those units so fast? He can do concessions. Concessions. I hate concessions. Yeah, because I hate concession shoppers. Because concession shoppers can live an entire year without paying rent. They can go, hey, first month free, I'm moving in. What happens in the second month? They don't pay. What happens in the third month? You evict them. Where do they go? Somebody down the street says, hey, first month free. There are people that do that. We call them professional concession shoppers. So fastest way, he has to fill up those units as fast as he can. In other words, what does he have to change? He changes. What's that? No, he changes his tenant criteria. See, he had that property running along smoothly, no headaches, 80% occupancy, 32 units filled with people year in, year out. He didn't have any problems. Now he's going to fill up those other 8 units. Who does he rent to? Who?
The worst.
The worst. Who are the worst? No, I'm worse than college students. Nah, Section 8's not so bad. Sex offenders. Oh, yeah. Are you kidding me? Oh, you want to fill up a unit fast? Rent to one sex offender. Shh. You're bad, Calvin. So, you just knocked me off my game, man. Okay, rent to sex offenders. Because you know who sex offenders are friends with? Other sex offenders. You can fill up that place right away. Who's buying that property? You are. Now you're going to deal with sex offenders. Nothing can clean out a property faster than sex offenders. But he doesn't care because it's going to be your problem, not Daddy Warbucks's. So that's how he gets his income up that fast in 30 days, 90 days. All right?
Well, there's no disclosure?
What's that?
There's no disclosure on the lease for that.
Oh, well, if you're doing tenant criteria, there is. But if you remove the tenant criteria and start renting to anybody, hey, when you come in, you create your own tenant criteria. It's not my problem. Yep. Expenses in the next, he reduces the expenses by 10% in the next 90 days. How does he do that? Doesn't do any repairs. What's another way he doesn't do it?
He makes the tenants pay for the water.
Well, he can't really make the tenants pay for the utilities because they're on a lease.
What about the new ones?
The new ones, yeah, the new ones you can make them start to pay, but if you have a vehicle for managing what the utilities are or calculating what the utility expenses are. What else? Just not pay. He does his cash accounting. He does his accounting on a cash basis. He just doesn't pay. You know what's a one expense that is always the red flag when the landlord doesn't have any money? It doesn't appear. Do you know what it is? What is it? I'm sorry, second?
Repairs.
Repairs and maintenance, but they can hide that. Pest control. If you see a property that doesn't have any pest control, you know the guy doesn't have any money. And then he'll tell you, oh no, well, we don't have any pest problems here on the property. I'm telling you right now, folks, every apartment building has a pest problem. I was looking at these properties down in Texas. I was buying this big portfolio in Texas. And I walked half the units, and my property manager walked the other half of the units. We meet up at halfway through the day at lunchtime, and he says, boy, can you believe all the cucarachas on this property? And I said, I mean, that's cockroaches, Lori. I don't know if I need to explain that to you, little cockroaches. So cockroaches, and I said, no, I didn't see any. He goes, what, are you kidding me? They're all over the place. I said, no, really, I didn't see any. He goes, where are you looking? And I said, well, just like under the sink. Said, no. Cockroaches, does anyone know where cockroaches hide?
Near the pipes.
Not near the pipes. This is inside a unit. Right up here. Right there on top of the sill. And usually, obviously, there's a big space here, but if it's a typical place, this space is very small. And they hang out up here. So when you walk into a room and you turn on the lights, look at that sill there, and you'll see all of them scurry. Yeah. The second half of the day, holy cow, I saw more cockroaches than you can imagine. That was unbelievable. So pest control. Guy stops paying pest control. His expenses drop by 10%. So right away, we've got a swing of 20% in the NOI. His NOI has increased by 20, and folks, has he done anything more to bring value to that property? He just played fast and loose with the books to trick you. All right? Now let's calculate his value. The NOI is $120,000. Has his cap rate changed because of the change in the NOI? No, not one bit. Still 10%. What's his asking price now? 1.2. Folks, he just increased his net worth by $200,000 in 90 days. How does a Subway franchisee do that? You can't. But this is how I want you to think about this. Who pays the $200,000 and who receives the $200,000? Let's put it in real terms there. What is your name?
Ron.
Ron, let's put this in real terms, okay? Little Johnny gets that $200,000. Who pays the $200,000?
That he buys the property.
My kids pay the $200,000 to that little shit. Okay? Now do you get it? When we put faces on this, it changes it. My number one job is to make sure my clients don't get screwed. All right. Nice business to be in, huh? When you know what you're doing, this is a phenomenal business. This is a letter I got from one of my students. Let's see if we can get that. I'll read it. He's having a problem. He said, I just can't figure out the cap rate. So if there's anybody out here who's just still kind of hemming and hawing on it, don't worry about it. You'll get it. This may sound hard to believe, but I'm actually a realtor in LA and I own 4 investment properties, all 4 units, all no debt. How many people want to be him? Yeah. When I bought each one, the driving force behind the deals were based on the specific location and future equity gain. My gut telling me if it was a good deal, and of course cash flow. That's it. So my analysis for each deal went something like this. I looked at the total cash flow, I subtracted the expenses and the loan, taxes, insurance, see how much money there was left over that I'd be pocketing. If it made sense, I did it. Simple as that. So far, these childish methods have served me well. A little more background. I barely graduated from high school. Math was my worst subject. I don't know algebra at all. So all of this is to ask you, what are the incredibly simple shortcuts to figuring out cap rates, cash on cash return, and gross rent multiplier, etc.? What are they? So these formulas are like Chinese to me. Now, I didn't mean that to be a racist joke or anything. He did it. Please don't be offended. These are like Chinese. You own a foreign member. So as you can see, you don't have to be a genius. You don't have to understand all this stuff. It's a very simple concept. This business has been around. What was Jesus before he was a savior? He was a tenant. Okay, this business has been around since the birth of Jesus. You receive $1 in, you pay out 80 cents, you're in business. That's it. Oh, did that offend you, Sudie? Good, because it's gonna get worse for you. If it did, it's gonna get worse for you. All right, now folks, here we go, and we're coming down to this is, I got 45 minutes to go through the whole thing. And this is kind of a new concept, the way I'm teaching this, and this is what I call the anatomy of a multifamily deal. I want to take you through what it means and what you have to do in this business from soup to nuts, okay? Just so you can understand it. And I'm going to show you also what I call it, or how does Charles Dobens make multifamily investors. This is what I do, okay? This is all part of my program too, what I sell. All right, first one is finding the deal. Now, Dan talked about this, and he said, like, you know, that he almost grasped the same thing I was going to say, which was that there's so much of this business is all about finding the deals. It is no different in my business. This is 90% a sales and marketing business, okay? You have to be out there looking for deals. I have one student who has over 5,000 units. He started with me with 0. And I knew that guy was going to be a success because he had 30 years as a manufacturer's rep. He was a salesman. He knocked on doors. He had phones, you know, hung up on him. You have to, the first 2 deals in this business are the hardest. Once you get 2 deals under your belt, you and I just are friends. That's it. So, finding your first deal. It's all about sales and marketing. The only part of this business that you can control is making offers. If you're not making offers, this is nothing more than a very expensive hobby. And hobbies are avocations, not vocations. You're not going to make a dime. I love to fly. I don't make a dime at it, okay? It's my fun. I never will make any money at it. So just understand that if you're just not making any offers, this is nothing more than a very expensive hobby that you're sitting in on a Saturday afternoon, beautiful day out there. I could be flying and you people could be doing whatever you do, but this is how it works. You've got to make offers. That's it. So we have a new tool my students have. How many people have ever heard of a NODO? Oh, guys, you got to check this out. Enodoinc.com. Enodoinc.com. Mark Rutskin is the founder of it. He's been on my podcast. He's been on my coaching calls. This is such a cool tool. Now, when you sign up for my program, I give you software to analyze deals, but it's a static analysis to determine what price we're going to make an offer at. What Enodo does, it's a dynamic analysis. It shows you where that property has been, and it shows you where that property is going. And you've got to use a tool like this to see exactly what's going on in the market that you're looking at. So the way it works is, you go in here, you put in the address, and it shows you, this is just recently viewed, it shows you, like for instance, here's Greenville, South Carolina. Now in Greenville, South Carolina, I wanted to look at all the properties that were built between 2000 and 2019 that are between 10 and 50 units. And all these gray dots, that shows me that's Greenville. So if that's what my market is, that's the type of property I'm looking for in Greenville, I know I'm going to have to broaden my search, but I also know that that's my closed world. If I'm going to buy a property like that, those are the owners that I have to go approach and ask them for their business, ask them to buy their property from them. All right, now what you do is I found this one property, 100 West Court Street. It is built in 2000, 42 units. There's the picture, and look at it shows me what's gone on with the rent in this property from January 18 down to December. It started out at $1,700 last year. Now it's down to about $1,400. Is this a good property to buy? Yeah. I love it when the guys think the right way. Yeah, now we got to figure out what's going on. But before, we will be looking at this property, buying it down here at this current rent, not realizing that this property is trending the wrong way. We now need to ask some more questions about this property. Pretty cool tool, huh? All right, then what it does is they have their own underwriting calculations, and then I'm going to put in mine. and it's gonna tell me what their price is. They're saying that it's a 5.1 cap, and it should be at this price, and then I'll have my numbers built in here, and I'll calculate mine and compare the two. So I'll see what my analysis comes out to be, and I'll see what a NOTO's is based upon all the other properties in the marketplace. So now I know if my offer is in line with the market. Think the broker's gonna give you this information? Yeah, exactly. All right, then it shows me that if I want to do something more to force the appreciation on this property, I can go in there, and if I allowed pets in my leases, 76% of all my competitors do it already, and I can increase my rents by about $16 if I allow pets. Okay, that's a good idea, let's do that. Now we just control what type of pet it is. It tells you the different unit types, and then I can do similar properties. I can actually compare this property to other properties, and I get to choose what properties I compare it to, not the brokers. You know, when you look at a broker's offering memorandum, offering package, and he's got his, sales comps and rent comps, do you think he chooses the ones that don't make his property look good? No. So we get to choose what the comps are. All right, and then we do a whole benchmark comparison. So this is one of the tools that we now use, and it's like $500 a month. If you're in my program, you get it for $150 a month. That's Mark gave us that deal. So, but it is, and the thing is, I just tell my students, like, okay, don't spend the money, just give me a call, send me the address, I'll put it in there. We'll take a look at it. So, we also start looking for deals. The number one thing is we have to find properties on the internet. That's the easiest place for us to start. And we're gonna look where no one else is looking. Major retail sites, but not for properties. How many people have never heard of LoopNet? Everybody here knows LoopNet. No, you don't know LoopNet? Well, you gotta raise your hand. That way I can call on you. There you are. Jeez. You understand how this game is played? Come on. Now I'm gonna pick on you even more now. All right. LoopNet is where deals go to die. It is. And you look for a deal on LoopNet, just think about it. Look at this. A broker one day told me, this is how LoopNet works. He puts a deal on LoopNet one day. Within 3 days, he receives 1,700 requests for additional information. Very simple. If you're on LoopNet, if you want to get more information, you just click a red button, and it goes right to the broker. So he gets 1,700 clicks for more information on that property. He'll receive 20 more calls from people asking for more detailed information about that property. So some people have actually looked at the information. 20 more calls. From that, he's going to get 5 offers, and then 1 person buys the property. Now, there are 2 ways to look at this. If you're the guy that bought the property, you say that you beat out 1,699 other people, and you successfully bought that property. If you're one of the 1,699 other people, you say, we passed on that dog of a property, and that idiot bought it. All right? You're never going to find a deal on LoopNet when you got 5 million eyeballs looking at it at the same time you are. That's not how you find deals. All right? But when we look for our brokers, we want to find brokers in our marketplace that are doing deals. That's what we use LoopNet for. You go right on there, you do a search. I did Charleston because I want to end up in Charleston. I want to move to Charleston in the next 5 years. So I'm just looking at Charleston. There's Kristen Krause. She does multifamily investments. I want to send her a message. Click the red button. Send her a little message. Type it in there, hit enter, contact broker. Now Kristen Krause is going to contact me. Now this is what I call a shotgun approach. Because when I do it this way, I just did a search in LoopNet for Charleston or South Carolina. 500 brokers pop up. Do you think all 500 are actually doing stuff in Charleston? No. But I'm going to send out a message to all of them, letting them know I'm here. That's the shotgun approach. Now the rifle approach is when you do a search on all the properties for sale in South Carolina. And then from that, you click on one of them. Look at this, office property for sale. Do I want to do that, buy that property? No. But that broker has listings He's making a living selling real estate. So we want to talk to him, because he's doing deals. This is the rifle approach. This is how we use LoopNet. Now, yeah, here's a property that, Charleston, you click on it, watch the property, you send an email to Darcy Patron, say, Darcy, this is how that's 1,700 in 3 days. You just click that red button. There it is. Hold on, I'm going the wrong way. Okay, other retail sites. Believe me, guys, I have my all-day course. We do this like all morning. We talk about it, right, Eric? Yeah. This I'm going through very quickly. In my course, the first class, and you'll see it, is all about how to find these deals. Other retail sites. Marcus and Millichap. MarcusMillichap.com. Great place for research. CBRE is a great place for research. Okay? Now, another place we call government agencies. The government's one of the biggest sellers of multifamily property. What's that? HUD is one of them, right there. HUD. You get a weekly listing of multifamily properties, and you can dig down deep. There's one. That was one in Rhode Island. 3 of my students were down there in Rhode Island, and they came across this one, and they went and took a look at it, and they said there's a reason why this thing was foreclosed on. So they said, we'll pass. It was bad. All right. The other thing you can get on HUD is a list of all the sold multifamily foreclosure and a list of all previous asset sales. Free. This is what it looks like. Look at this. All the HUD-owned property, HUD-owned sales, sorted by state. It tells you when the deal closed, what the price was, how many units. It tells you who the purchaser was and what the property was. Now you've got a list of all the owners of all the properties that HUD's did a deal with in the market that you're looking in. Pick up the phone and call the owner. It's a sales job. If you're selling insurance, you got to pick up the phone and call the owner. This is no different. It's a sales job. That sounded bad. A sales and marketing job, yeah. I'm giving you a sales job. All right. Then we have below the radar sources. Look at this. This is called the Society of Exchange Counselors. secounselors.com. This is a group of brokers who are CCIMs, Certified Commercial Investment Managers. Highest designation, in my opinion, that you can get in the commercial real estate business. If you get a CCIM, these guys are good. I've had nothing but good transactions with CCIMs. They have this organization, groups of them, where they meet every quarter to do deals. They do deals like crazy deals, like, hey, if I sell you this property, I'll throw in a plane. You know, stuff like that. They'll just do deals, whatever it takes. And the thing you got to do when you come here is, here's a listing of all of the multifamily properties that they have on their website. You can't approach these owners. You have to go to them through an SE counselor. So what you do is you just find them and you contact the SE counselor and he'll bring you the deal. These deals do not appear on LoopNet anywhere. And what you have to do is click on detail over here, so that when you click on detail, you can actually see, and you've got to click on detail. Because one time I was reading it, and it was like a property, let me grab one here, Dickinson, North Dakota. Do you think I want to buy property in Dickinson, North Dakota? No. But if you read the details, you'll see that the owner owned a 45 unit in Lubbock, Texas. I will have clients doing deals in Lubbock, Texas. But you have to read the detail to find that out. All right? Here's Alex Cooper. This is when I was down in Baltimore. I was teaching in Baltimore. I said, let me see what I can find. I find this group here, the real estate division of this auctioneer firm. All right? Click on attorneys and trustees. You know, guys, this is what football is for. This is what NFL football is for. Nobody gets it? You sit there with your laptop in your lap watching the Patriots win again, and you just start drilling down on the internet. You find these things. You don't stop on the first page of Google when you do a search on Santa Barbara multifamily. You go down to the 5th page. You find some cool stuff down there. Here we got one. They got a whole section on multifamily. 48 unit, a 7 unit, a 308 unit, a 13 unit. None of these are on LoopNet. I already checked. Discount property investor. I had this client call me up and said, hey, I want to buy this property for $600,000. I said, where'd you find it? I found it on discountpropertyinvestor.com. So what the hell is that? just